can now move on to how to actually read Heikin Ashi candles and use them in your trades. First of all, reading the Heikin Ashi chart is actually very simple and straightforward. We can classify the Heikin Ashi candles into three main types. The first type is a bullish candle. A bullish candle is displayed as a green candle with an upper wick. In a bullish candle, the lower wick can be short or even none at all. This type of candle signals that price is in an uptrend. The size of the candle's body can also measure how strong the trend is. A green candle with a big body means it's a strong uptrend, while a green candle with a small body means it's a weak uptrend. The second type is a bearish candle. A bearish candle is displayed as a red candle with a lower wick. In a bearish candle, the upper wick can be short or even none at all. This type of candle signals that price is in a downtrend. The size of the candle's body also measures the strength of the trend. A red candle with a big body means it's a strong downtrend, while a red candle with a small body means it's a weak downtrend. The third type is the doji candle. A doji candle can appear as either green or red, but the key characteristic is that it has a small body and wicks on both sides that are almost equal in length. This type of candle shows an indecision in price, as neither buyers or sellers were in control. When a doji candle forms on an existing trend, it could be a sign that the trend has weakened and that a sideways move or a reversal could form next. And so, based on these three candle types, they form 5 powerful signals on the Heikin Ashi chart, and understanding these signals will be crucial for learning the strategy later on. Number 1. Strong uptrend. In a strong uptrend, you'll see a set of bullish candles with no lower wicks. The body of each candle also grows larger in size, showing that the uptrend is gaining momentum. A strong uptrend shows that if you already have a buy position running, it's best to hold it, as the trend hasn't yet shown signs of slowing down. But remember, the ideal entry is actually during the early stage of the trend, when the body is still small. Avoid buying near the top, as most of the upwards move has already played out. I'll explain how to do this later in the strategies part. Number 2. Weak uptrend. In a weak uptrend, the body of the green candle starts to shrink in size. Usually, we might see lower wicks begin to appear. This signals that the uptrend is starting to lose strength and that it could move sideways or even reverse soon. During this time, you should be ready to exit your buy trades. Number 3. Sideways trend. In a sideways trend, you'll often see several doji candles forming one after another. A single doji candle might just signal a pause or a momentum loss of an existing trend. But when multiple doji candles appear consecutively, it shows that the market is consolidating or ranging without a clear direction. I'll explain how to take advantage of ranging markets like this later in the video. Number 4. Strong downtrend. In a strong downtrend, we have a set of bearish candles with no upper wicks. The body of each candle starts to grow larger in size, showing that the downtrend is gaining momentum. A strong downtrend shows that if you already have a sell position running, it's best to hold it, as the trend hasn't shown signs of slowing down yet. But remember, the ideal entry is when the candle body is still small, as there's more potential downside move. Avoid opening sell entries on large candles because most of the move has likely played out. Again, I'll show you how to catch early entries like this later in the strategies part. Number 5. Weak downtrend. In a weak downtrend, the body of the candle starts to shrink in size. You might also see upper wicks begin to form. This signals that the downtrend is losing strength and that price could soon reverse or move sideways. During this time, you should be ready to exit your sell trades. So, now that you understand how to read the Heikin Ashi chart,